Hello everyone, welcome to Forex Training with the Pro. This is Topper Joe, and then we want to go straight into the first lesson of this course. This course is going to entail trainings from the board, and then we'll go to the computer to do the practical session. Alright, so let's go straight into it, explaining what the Forex is. The Forex is actually a shortened form of the foreign exchange. And what is foreign exchange? Foreign exchange is simply the conversion of currencies from one to the other. I'll give you an example. You want to buy a product from the United States of America and you're in Nigeria. How do you get the products there? There has to be a conversion from Naira to dollars. That is a simple example of Forex. Simply the conversion of currencies from one to the other. Now, the foreign exchange market is where that actually happens. And with the Forex that we're talking about here, the exchange happens electronically. What do I mean by that? On a normal day, you probably think that as what we have with stock markets and other markets, that there's a central location for it. But with the Forex, there's no central location. What happens is all the transactions take place over the counter electronically, right? So that way you are able to trade round the clock. We have markets in New York, London, Singapore, Sydney, and Tokyo. Now, what that means is the market is actually open round the clock, 24 hours in a day, 5 days in a week. So we can trade from Monday, Tuesday, Wednesday, Thursday, Friday. There's no trading on Saturday. And then by evening on Sunday, the market actually opens. So what that means is you can trade any time of the day. All right. Now, how did the Forex come about? Forex actually has been in existence for a while, but it was exclusively for big banks, investment banks, and multinationals because of the cost involved in transaction. But at the Bretton Woods Conference and Agreement in 1971, the market was actually decentralized. So countries were able to float and interact more independently, and that brought about the foreign exchange market as we have it now. Right now, as I speak, the foreign exchange market is the largest market in the world with $6.6 trillion on a daily basis that is being transacted all over the world. Right now, in Forex, currencies are traded in pairs. What do I mean? You trade currency A and then it's paired against currency B. Let me give you an example. For example, we have GBP, which is the Great British Pounds, and we have the USD, which is the US dollars. If we're going to trade it in Forex, what happens is these two currencies will be paired to give what we call a currency pair. So this is an example of a currency pair. GBP, USD. Can you see it's written together? So this is a currency pair. So when you're trading a currency pair, not just one currency. Remember what I told you, definition of Forex, conversion of currencies from one form to the other. So we need to bring them together and look at how it works. Now, if you have a currency pair, say GBP, USD, there will be a price attached to it. And that's the example I wrote here, 1.2345. What that means is you need $1.2345 to buy 1 pound. Let me break it down a little for you so that it gets clear. GBP all over USD. Okay, so that gives you 1.2345. So when you see a currency pair GBP USD, this is actually what it means. And then so when you see a value attached to it, that means 1 GBP is equivalent of 1.234 USD. I think that is clear. All right. Now, how do we trade? How does the Forex market work now? Because of the Bretton Woods agreements that I talked about and the advent of the internet, we are able to trade electronically. Now, what that means is you and I can trade, even though we don't have as much money as the commercial banks, investment banks, and the multinationals. We can also go into the same market and trade. How that happens is because we have Forex brokers. Now, Forex brokers are companies that give us the access to trade in the large market, even though we don't have enough money or we don't have as much money as is required, on a normal day. They provide a platform for us, and then we leverage that platform and then trade the foreign exchange market. That's more like a definition and a summary of what the foreign exchange market is. It's the largest market in the world. Electronically, the market is traded electronically, and the market is open 24 hours in a day, 5 times in a week. Thank you.